I want to flesh out a couple concepts that tie into my previous video. One is price discovery and the other is market stratification. So price discovery is pretty simple. It's the path that the market takes to determine the fair value of a property. So basically think of it as the interaction, or in this case the lack thereof, of buyers and sellers. And things like property type and condition, location, comparable inventory, comparable sales, these are all going to influence the rate and extent to which price discovery happens. Now it can take months or it can take years. If you remember my last video, I used this chart to talk about median prices for one bedrooms from about 2011 to 2020. But what's happened since then? Well, price discovery happened. After hitting a peak in March 2022 of $670,000 for a one bedroom across the city, we've dropped to about $490,000, or about 27% off of that peak. Comparing June stats to the peak of 2022, we can see those numbers hold up. These are pretty well in line with that drop. Volume of sales is obviously significantly lower, and prices have dropped on average here about 22% for these two unit sizes. But how are those larger units faring? Let's jump to the 900 to 1,000 square foot segment and we start to see something interesting. Volume of sales is still down, as are prices, but not to the extent of the smaller units. It's important to keep in mind most of these larger units are going to be older, they're going to carry a larger maintenance fee, and the stats are going to contain other property types like condo towns, co-ops, and stacked towns. But here's the interesting part, and let's not discount that there are fewer of them available, of course. But even though they're more expensive to maintain and more expensive to purchase, they're still selling at a faster clip than smaller, cheaper units. To me, that speaks to the demand for covetable property, right? Let's break this down further. When we look at months of inventory, remember we had that big chart of pre-construction months of inventory at 5 years, we start to see this thesis really take shape. The larger the unit, the scarcer it is because of the focus on investor-driven sales, and the lower the corresponding months of inventory. So the smaller the unit, the higher the inventory, the higher the competition, and the greater the likelihood of a prolonged period of price discovery. So the theory is larger units will begin to distance themselves not only from a demand standpoint, but also from a price and per square foot basis. Where once upon a time, the smaller the unit, the higher the per square foot price would be, I can see the inverse happening over the coming years. So yes, smaller units are still selling, but there are way more of them, and there are many more on the way. Whereas larger units, despite, a pretty substantial 15% drop from the peak, they're still sitting in 5 months of inventory. And for the moment, they're trading in what we're going to call a balanced market. So when I said market stratification, this is exactly what I'm referring to. Those smaller units that were geared to investors, they're at the beginning of a cycle of a pretty drastic oversupply. What happens when that wave of smaller units hits the market? What kind of impact is it going to have on these numbers or the value of those older, larger units? I think we're really going to have to start looking at the condo market with multiple lenses because the data will never provide a one-size-fits-all narrative. Again, the resale condo market is going to contain many, many segments within it. So when you see articles using blanket numbers or big claims around its data, it's probably a good idea to dig a bit deeper.